Welcome back. This is your friend Michael Gabriel, and I'm really sorry for having not been able to post my video forecast on currency pairs for a long time. This is due to my busy schedule offline. And by the way, let's get down to business. What I have here is EURUSD, and this is a weekly chart. And for quite a long time, I've been on this currency since the beginning of January. I had to drop other currency pairs and focus on this because there is a huge movement in this currency pair. If you look at this trend line, you discover that this particular trend line, to be specific, you will discover that EURUSD touched the trend line and started falling. I kept this trend line at the beginning of this year because I know certainly that this currency pair will touch this line and either break it or make a reversal movement, and hopefully it did a reversal movement. It started the reversal movement on to be precise, on the 4th of May. Yeah, that should be no, on the 27th of April. Up until then, we've been moving down from 1.399 to even 1.357. That's almost 400 pips to be precise. Okay, and for this week, let's take a look at what is happening on daily charts before. Sorry, if you look at the daily chart, there was a little spike this week from 1.356 to 1.36362. That's between 60 to 75 pips. Although that was a good move, to earn somebody some pip. I was not able to trade this market move for some personal reasons. To me, I was waiting for the market to correct itself before I either trade my bearish movement continuously, or if the market is strong enough to make a reversal on the for bullish turn. But for the market to be able to do that, it should be able to break 1.37. Sorry, it should be able to break 1.37 region, as in 1.372, to be able to make a strong bullish movement for 1.400 and above. But for now, if you ask me, I will tell you that I'll cautiously maintain my my bearish momentum on this. Okay, and I'll be targeting this level. Let me expand this a little bit. 1 minute please. And the level I'll be targeting for my bearish movement will be limited at the 50.0 Fibonacci retracement. That's around 1.348. That will be my target for the bearish movement. Now, what will determine if this bearish move will continue is if this this bearish momentum is able to break this major support resistance level. Okay, if it's able to break it, then we should be looking at next level for 1.3286. But I'm not possible that will take place. It will end up limiting its bearish move at this major support resistance level at 1 point. Now, if you ask me, I will say 1.480 should be a safest region for you, for me, as I continue to sell. And there is a reason why I have a strong speculation for, or a strong penchant for bearish move. If we're on the weekly chart, if you look at the weekly chart and you watch the candle, this is a bearish momentum, and at this place we have a little break. This candle itself means that and it does not mean anything. It's a doji candle, quite alright, and it does not imply bullish, any bullish implication at all. This doji candle do not imply any bullish movement at all. It is rather telling us that the bearish momentum will still continue, and if, like I said earlier on, we should be limiting our bearish momentum or our bearish this thing market entry at 1.348 levels. That is a little bit above the 50.0 Fibonacci, support resistant level, because that's this particular level, this particular resistance support level, it's a major support resistant level. So if you are to sell your this particular currency pair, I would strongly advise that you limit yourself a little bit above this support resistant level and stand aside to watch what happens in the market. And if you go to if you look at our technical indicators, that's I'm using relative strong index indicator. If you watch closely at this indicator, you discover that, like I said, that market is neutral at this level, and it has broken the 50% mark at on weekly chart, which further imply that there is a possible bearish, and there's going to be a further bearish momentum. Like I said, the doji candle means the market is neutral, and that was strongly implied here by my relative strong index. Okay, so one more thing I would like to advise my beautiful audience out there: whatever you're doing in currency trading, always use the weekend. I always say this in my previous videos. Always use the weekend to plan your trade. The weekend is not just only for jamborees, resting and everything. Have a wonderful time to plan your market. Okay, back to Euro USD. Let's go to monthly chart. Now if you look at the monthly chart, it's still telling us that the market is bullish, but this is on a long time. This is a long time view. This is a long time view. Certainly the market will break this 1.3399 level and even move up to 1.40 and above. But for the meantime, you have to be patient with the market and follow the market in, as per what is happening now in the market. You have to follow the market, except if you have the patience to trade long. There are a lot of my friends out there who are long-term traders. Is a very good, they are doing a very good job trading forex. Now for those of you who are daily traders who trade on a daily basis, judging the market from a monthly aspect might really have a strong negative implication on your trade. So if you look at the monthly chart, like I said, it's still implying a bullish outturn, okay, but this is on a long-term view. So that is it for my Euro USD on monthly. Now let's get to daily and 4 hours time frame. And like I told you earlier on, there was a little spike here, and for us to really decide if this market is going to be bullish, it has to break the 1.37373 or 372 levels to maintain a bullish view. In absence of this, I will kindly advise you to maintain a bearish momentum, and you should be, and like I said, you should limit your this thing on your bullish view on 1.34. I mean your bearish view at 1.348. Okay, now after this you should stand aside and wait to see the market. That does not mean it's not going to get here, but it is safe to keep it here for me if you're on a bearish trade like me. That is it. And if you look at the chart on daily daily time frame, you discover that there is a serious bearish momentum here. The same thing is happening on 4 hours charts. Look at it. And even at that, I mean, it's why I said you need to maintain the bearish momentum. Even after touching this, what's it called? This moving average. And let me check. This is my 60% moving average. Even after touching this moving average on 4 hours chart, you discover that over the weekend EURUSD was not able to break it. There was a little issue, and this is a bearish candle, I mean, coming up gradually. Let's go to 1 hour time frame. You see what I was telling you? Look at that move that happened on Friday over before the weekend, and this is beginning, and it has already if it is some of my friends, they'll be like, this has already formed a head and shoulder here, and obviously we should be expecting some spike downwards. So, but I don't use this graph pattern on 1 hour charts. You find out on Monday morning that this head and shoulder is not obeyed or something like that, or he might obey it and still continue. So that is it for the different time frame. In summary, because of this doji candle on EURUSD on weekly chart, I will maintain a bearish momentum targeting 1.348.